Fantastic. I hope you're all fed and watered. Good afternoon, and thank you for joining this building session this afternoon. I'm your chair for this afternoon. My name is Sarah Fitzmaurice. I'm one of the CEOs and co-founders of Executives in Africa. As an aside, if anyone is interested, I am also on the Global Advisory Council for 100 Women in Finance, which is supporting gender diversity across the world, and I'm helping them get set up in Africa. So very exciting. Please do come and find us at our stand upstairs, Executives in Africa. Another small plug. Lots of handshaking going on today. So if you want a freebie, we've got a really nice little hand sanitizer that you can come and pick up. Clearly nicely branded, but do come and find one at our stand. So we're going to kick off with the first panel this afternoon is led, to put my glasses on for this, by Aubrey Ruby. Aubrey is a long-time advisor to investors in African markets and an angel investor herself in African startups. For the last 18 years, she's worked across various sectors and asset classes across 30 African markets, facilitating over 2 billion in capital flows to the region. So she's really well set up. She is a senior fellow at the Atlantic Council's Africa Centre. She speaks and writes regularly, and she's got a fantastic book out that she co-authored, which is called The Next Africa. So do look that up on Amazon. She didn't even ask me to plug that one. So got a slightly depleted panel, but I shall hand over. It's depleted, but absolutely top quality. So I shall hand over to Aubrey to introduce this panel session this afternoon. Thank you, Aubrey.
Thank you, and thank you everyone for coming after lunch. It's not the easy slot to get, and we're really here on this topic on logistics and infrastructure around transport, and clearly we had some logistical problems getting some of the speakers here, so it's all very fitting. And because it's very intimate, hopefully we can have a very interactive session. I won't wait till the end to take questions. We're few, so we can weave them in as we go. And really, the topic, digging deep, is an important one for all aspects of investment into African markets because, one of the challenges of the region is that less than 3% of the world live in small landlocked countries, but 30% of Africans do. And that means that infrastructure and logistics are key to reducing the cost of doing business in the region. And so I'm joined by both Jeff and Simon today, and I'll first turn to them to tell you a little bit about their organizations and what they're doing in this space. First, Simon Davis, who's the Managing Director of Ox Global. So we're different on mics. We got all kinds of logistical things going on here. Okay, and Simon, tell us what Ox Global does. And apparently there's a truck outside we need to see.
Yeah, first things first, there's a truck outside, so check it out on your way, which is our first electric truck. But we're a logistics business providing mobility as a service, so we enable people to move any quantities of goods, from a sack of goods up to contracts for moving thousands of tons, and that way we really drive down the entry price for transport.
And where are you operating in African markets today?
We're operating in Rwanda, so we started our Rwandan operations in March of this year, and we've seen 40% growth month on month.
Fantastic. And so you're combining, it's vertically integrated, you're combining a platform play with the actual physical trucks?
Yeah, so the trucks, so we have our own truck because as a platform we're interested in the lowest total cost of ownership and the cost of moving stuff. So there aren't any, so the way we do that is having our own electric truck, which is the first vehicle really purpose designed for the bad roads of the continent since the Land Cruiser 75, and obviously the first EV, because there aren't any others. And EVs, everyone associates them with 0 to 60 in 2 seconds and Elon Musk. But in reality, they're really good at moving things at low speeds with low maintenance and low energy. And of course, all of Africa's fuel is imported. So it's a big win for everybody in the value chain, from governments all the way through to the consumer.
And where are the batteries coming from?
So we use batteries from Iveco. Mm-hmm. So I guess you mentioned vertically integrated, and it's all the rage because Elon does it, therefore the car industry is going vertically integrated. But what we see is that we integrate from the truck to the customer, whereas what people like Tesla are doing from the truck down into the deep tech. But we don't need to integrate to that level of performance, so we use off-the-shelf batteries Iveco and motors from Dana Axle.
Fantastic. Jeff, tell us about Agility. Jeff White is the CEO of Agility Africa.
Thanks, Aubrey. It's great to be here. So Agility is a publicly listed company in Kuwait and Dubai. We have a $7 million valuation, and we're the largest developer and operator of warehouses across the Middle East and Africa region, with a portfolio of about 21 million square meters of land. And our strategy in Africa is to buy plots of land adjacent to the main cities across the continent, right across the continent, and create a network of warehouse parks that are interconnected. So the idea is buy a site 300 to 500,000 square meters. For the non-real estate those around us, that's about 85 football pitches in size. And then we build a first phase of warehousing, and we believe that rather than just being a land speculator, you build it and they will come is our approach. So we actually invest in building the warehousing so that if you come and talk to Agility on one of our sites, you can sign a lease on Friday and move in on Monday. And that removes one of the big issues of doing business in Africa, that every plan takes 3 years to execute. So our focus and our philosophy is to always match supply and demand, so that if you need a warehouse for your business, then it's available. If you look at our customer mix, it's a combination of SMEs and multinationals across the. So far, we started in Ghana. We then bought a site in Abidjan that's up and operating. Mozambique has just started operating. Nigeria is just starting construction in Lagos. We're about to close a transaction to buy a site in Nairobi, and we're chasing sites in Dar es Salaam, in Casablanca, we're looking in Addis, Luanda, and Kinshasa. So the idea is to build a platform of infrastructure, and we only do the infrastructure, so we just lease warehouse space. We don't do anything else. Lease it to multinationals, lease it to SMEs, to enable them to get into first world infrastructure where the power is reliable, it's a secure environment, it's a scalable environment, and the IT is fast and consistent. So addressing just those little aspects, you actually build a platform that enables foreign direct investment and SMEs to grow and expand. From our perspective, we're very focused. Each project for us, on average, is about $150 million investment. So it's a big capex across the continent, but I think really importantly, it's directly aligned with the growth in e-commerce that's going on, and e-commerce needs 4 times as much warehousing in market than traditional logistics. So there's a huge demand for warehousing for e-commerce fulfillment, both for B2C and B2B. Also, we're seeing a big upturn in local manufacturing, where people are wanting stuff manufactured, whether it be under license from multinationals or just local entrepreneurs that are saying, why does Africa import 90% of everything it needs? It should be manufactured locally. And then the third driver for the current strategy is that we're seeing more and more multinational companies globally who didn't address Africa as a market previously, suddenly saying, actually, we're beginning to understand the demographics of what's going on in Africa, and we need a presence in Africa. So we're building a platform that enables them to access the African market easily. The last point I would just mention very quickly is I think the Continental Free Trade Agreement has the potential, not next year, but sort of over 10 years or so, to transform Africa, creating this 1.3 billion person market. And we think that that's very much aligned with our idea of putting in the infrastructure that enables customers and our customers, so global businesses, to basically have a network of warehouses that are all interconnected, moving around the continent.
Yeah, Jeff, so question, because you talked about these kind of warehouse parks, right? Another way to say it is industrial zones, and African markets are riddled with ineffective industrial zones. There's some, last count I had was something like 400 across the continent. Nigeria has 33 alone. I think they upped it to 36. And you could say that maybe a handful are actually performing in a way that we saw Asian industrial zones lead growth. You're trying to build these new areas. Why not why not go onto the existing industrial zones, or what have been the challenges with identifying and trying to make industrial zones work in African markets?
So for us, the driver is really finding something that we can scale. So our model is we want 500,000 square meters of land, which will give us 250,000 square meters of warehousing. That's a big warehouse park, and that brings the ability for our customers to take one unit, and then as their business develops, they can expand without having to relocate, and they can grow. We can support them as they grow and develop. Our key drivers are location. So location on a major highway to give you accessibility both around the country and in due course to neighboring countries is equally as important. And yeah, there's lots and lots of half-built SEZs around the place. Often they've not had the funding required. So very specifically for us is we build and then look for customers. Mm-hmm. So we're happy to do build-to-suits on our specific lands, but the reality is, as I say, our overall philosophy is you've got to actually invest the money to build the infrastructure and have it available. There's too many of these projects you go to and they say, yeah, we can do it for you. Here's a piece of land that we own. But actually, it's going to take them 3 years to build it. If I give you an example, so we had a big multinational that came to see us in Ghana. They were wanting to set up a production facility in Ghana. A Danish company, and when we first met them, they had a plan to buy a piece of land, build their production facility, and they thought it would cost them $8 million to get into the Ghanaian market, and 3 years they would be selling product. They were able to come into one of our already built warehouses. They executed the same business plan for $1 million rather than $8 million. But probably more interestingly, they were in production in 3 months rather than in 3 years.
And so on this, it must take some coordination, right? You need to coordinate with ports, you need to coordinate with airports, with trucking providers. How do you make sure that the whole ecosystem is working?
So again, you plot out the demographics around. So if you look, we spent ages in Lagos, as again, for an example, looking for a site. We looked in Agbara, we looked in Apapa. You look at where vehicles can move as opposed to sit in congestion all day long. We ended up that the optimum site for our first project in Lagos was on the Ibadan Road. Mm-hmm. So when you look at the demographics of that, within a 3-hour drive, there's 50 million people. Yeah. So the reality is that, and we announced we've taken this site, we've bought there 270,000 square meters in our first thing. It's just starting construction, so it'll open up the end of next year. But interestingly, having done that research, and it's typical for Africa, an element of it is just walking the streets, understanding the ground as to what works, what doesn't. There isn't a huge amount of sort of statistical evidence for the process. So we pitched on Ibadan Road, and that's been a huge success. We've had e-commerce companies, big multinational distribution companies all saying, that's exactly where we would have wanted our DC to be. So a lot of it's just understanding the market, understanding which parts of the markets are growing, understanding the key freight routes of what's going on, any new port developments, any significant changes that are going to happen in the market, and then you base your decision on that fact.
Yeah, and I want to bring this conversation together here because in the United States, less than 4% of trucks come back empty. Right? So it means there's a back and forth coordination, and the platform is efficiently distributing, right? And same in the challenge with warehouses. Often in warehouses, say in a Nigeria case, there's a chunk of the warehouse that sits empty because they're not fully utilized, because people are waiting for long-term contracts, not using short-term kind of movement. And so how do we, and Simon, turn to you, like how do digital solutions help to solve these inefficiency problems?
Yeah, it's definitely a real problem. We've seen it, typically in Rwanda, trucks, there aren't very many trucks in the market, but what is there will sit there waiting for customers, and we've taken like a reverse approach and proactively gone out and sold capacity. When a customer wants to move from A to B, you find a way of moving from B to C and C to D and back again, so that you're always driving logistics. And I think digital solutions have a big part to play in that, but there's also a limit. You actually need proactive people who are invested in doing that. We use what we call a driver plus model, which is basically our drivers aren't just drivers, they are also entrepreneurs, and they are sales, and they are customer protection and so on. And actually, you need to incentivize people to work out clever solutions, because what we've seen is there's massive demand for transport, but it isn't immediately there. You have to know people, go to markets, go ask people, we're coming here, do you want to go here? And then, some of the smallest customers that we've discovered have turned into some of our most reliable customers, asking demand every week.
Mm-hmm. And Jeff, what about this issue of short-term warehouse space, et cetera? I mean, I think that the Jumias of the world need that and surge capacity, and I assume with a big platform like Agility is building, that's easy to guarantee.
Yeah, so we have a mixture of tenants who are on 10-year commitments on the basis that they've spent money on their facility, set up a printing press or set up a production facility. We have normal logistics type distribution centers, etc. But we also have customers who take, Ghana's a classic example, who take 3 months space and store cocoa in the peak of the cocoa season, and then they don't need warehousing for the rest of it. So we're very flexible on that approach. And likewise with our dialogues with SMEs, traditionally an SME in most African markets, to lease a quality warehouse, you've got to pay 2 years in advance.
Yeah, exactly.
You've got to mortgage your children and everything you've got. What we've done is say, okay, we have a specific SME initiative where you pay 3 months deposit, we give you the keys, and you can move in.
And so what about warehouses that are, spread out? Because, for example, there are warehouses all over Lagos, right? But they might not be effectively used. Have they thought about, selling out or putting them as part of a network?
So interestingly, if you look at the cost and efficiency, there's huge efficiencies come from having a warehouse cluster. So you've got one team of facilities management, one team of security, so you can be more cost effective by doing clusters of warehousing.
Okay.
And actually, when you drive around and you say, oh, that's a really nice warehouse there, that's really nice, most of those have been built by owner-operators.
Yeah, totally.
So I have a business, I want a warehouse, so I've built a warehouse or a factory to support my business. One of the interesting things as we expand and grow, one of the interesting phenomena has been how many customers come to us saying, I need a build to suit, I want you to build me a warehouse. And then they come and visit and they wander around our warehouses and say, actually, for the first time, I don't need to build my own warehouse. There's a warehouse here I can just lease that is solving my problems, or 90% of what I want. So why would I build one? So it's I think that traditional BTS model in Africa is actually, as supply opens up, is going to become less and less.
Yeah, it's an interesting kind of counterpoint to the I've seen all these companies out raising that are going to be like Airbnb of warehouses, right? So this asset light story, when you have the same with the platform for trucking, the Ubers for trucking, we were supposed to have Ife from Kobo, but Kobo 360, Lorry, Trella, that are coordinating, and then the question is where they hit up against infrastructure issues. And Simon, maybe that's one of the reasons why you guys are thinking about the actual trucks as well.
Yeah, I think asset light is a great idea and everybody loves it and you can scale it really quickly, but at the end of the day, to do stuff you have to have stuff. There's only so far you can go on your phone, and it doesn't actually deliver. I've heard anecdotal stories of Kobo where people they'll find a trucker via the app, but then after a few rides they've got a relationship with the trucker, and then why do I need Kobo? I'll move on. And people ask us, why do we bother with an asset heavy? Why do we not just use, entrepreneurs in the community anyway? And it's, to build a quality business requires a group of people. You can't, Uber is built around a fight. When the drivers are happy because they got loads of ride, the customers are unhappy because they have to wait.
Yeah.
And when Uber is happy because it's making a load of money, the customers are unhappy because they're charged too much and the drivers aren't paid enough. It's built up around a fight, and it only works because you're pulling new drivers in all the time. And they're still obviously paying money in order to deliver my practice. I came here.
So your drivers are your employees?
Our drivers are our employees, and that way they're incentivized to build up relationships, because actually it's not just about providing transport, it's about providing transport to people who don't currently use transport. If I currently use a bike or I don't shift stuff to market, what we're interested in doing is getting those people into motorised transport, because when they do that, their incomes can go up tenfold, 20-fold, which A, gives them a reason to pay us some money, and also gives them something to invest, which then means moving. And it's about kickstarting that cycle of growth. If I'm just a one-off asset-light guy, I want to move it, but I get paid a little bit, and then I get paid off, I'll go somewhere else afterwards.
Sure. So I want to weave in some questions from the audience here so that we have some participation. So someone come up with something creative so we're not just talking to ourselves up here. And we'll weave it in. But I guess my question for you, Jeff, is maybe kind of a hard one. Agility used to do a lot of logistics. So, you sold off your logistics business. Why was that? Why focusing on warehouse? Why going deep in this one area?
So I think, we about 2 years ago, we tried to buy a big logistics company called Panalpina, and we were outbid by a company called DSV, who ended up buying it. And I think having gone through that sort of process, we were a $5 billion logistics company, and the reality is you either had to scale very quickly to be more competitive or get out of the market. And the conclusion, having looked at various options, etc., was that we sold our whole logistics business to DSV in August. It's still publicly anyway, for $4.8 billion. We're now the second largest shareholder in DSV, which is great. So we've still got a very strong relationship there. But the reality is, I think strategically we'd come to the conclusion you either have to be very big in logistics or creative and starting something new. You can't be sitting in that middle position. So we're thrilled. We got a very high multiple on the transaction. We're thrilled with that process, and we're very focused on building our warehouse infrastructure, not just across Africa, but across the Middle East, Africa region. And we just think there's a real opportunity to align with everything that's going on that's positive across the continent and put in that key infrastructure to support it.
From that experience of the logistics business for so long and now the warehousing, what are some things that you've learned that would be surprising to some?
So I think warehousing, I'm still baffled why it takes us longer to build a warehouse in Africa than it does anywhere else, and twice as long. So if I'm building a warehouse in Dubai or in some of our other markets, just Africa takes ages for project execution, which I think is a big disincentive for foreign direct investment, and goes back to our concept of having warehouses available that you can move into the next day. But the reality is, and we've done huge amounts of analysis, is why is it that it takes twice as long in Africa to build a warehouse than elsewhere? And the reality is it's everything. So there wasn't one thing that came out of the analysis that it's the ports are bad, but the ports are bad, the planning's slow, the logistics are slow, just every element of the construction of a warehouse, which isn't sophisticated development, just takes longer in Africa than it does in other markets. So we're templating what we do to try and reduce those lead times. But from an investor's perspective, it means you've got to have more capital into your project in Africa in construction rather than before you actually get to leasing it.
Yeah, so you really have to have
But
appetite.
contrary to that, the margins are better in Africa, so one pays off in the other.
And one would argue high barrier in entry then.
Yeah.
Exactly.
Yeah.
It's hard for other people to do
We
it.
definitely think there's a first mover advantage. Yeah.
And so what have you learned in your experience in building out in Rwanda so far?
I guess our most surprising thing was just how much demand there was. You know, we looked at it on desktop studies, and you can always do so much, and we knew there was demand, but actual delivering services on the ground, the demand has knocked our socks off. You know, we built a whole business model around $40 odd a day per truck, and we've doubled that already, and we're 6 months into the operations, and we think there's opportunities to add another 50% on top, and that's before we get into other value-add services, because we think...
And before you go to big markets, because Rwanda's small.
Rwanda's small. So, the assumption in cars, my background is automotive. I worked for Jaguar Land Rover for years. The way you do volume planning for cars is really simple. How many cars are sold in the market? What sector is this? SUVs, sports cars, trucks, or whatever. And then what's my market share? And you look at Africa, and the answer is always like 10. It's just tiny. And everyone says, no, you can't sell cars in Africa. And it's right, you can't sell cars. What you need is a different model. There's still demand for transport. It's just providing that transport in a way that works for the consumers. And so, the demand, I guess.
So are you doing B2B and B2C?
Yeah, and I think it's very blurred. It's not quite a clear-cut definition as there is maybe in the UK. I'm a consumer, but actually most people are entrepreneurs. Most people, whether they've got an office job, they're also got a cow or a shop or whatever else. So we serve everybody from big people like RTC, who are a coffee producer, export 20% of Rwanda's coffee, through to individuals moving cooked food around. We do the complete range.
Excellent. Questions? Yeah, please, go ahead. Yeah.
Yes, question for Simon. So you mentioned that it's clean, so it's zero emission.
Yeah.
So do you think that's one of the competitive advantages in the sense that you're price competitive because you're zero emission, or is it that customers are happy to pay a premium because you're zero emission?
Or is it because you're actually a truck that's there?
So I'm sure our customers appreciate us being zero emission, but that's not why we went electric. Ultimately, EVs are cheaper to run and cheaper to maintain. And the problem with the conventional automotive model is you pay for a truck up front, and then you experience its costs over the lifetime. And EVs are more expensive to go and buy one. But it's another reason why we adopt the wholly owned and the mobility as a service model is what we're interested in is how much the truck costs over its complete lifetime. And we're prepared to spend more money on a truck up front if it saves us money over 10 years. So we went EV for that reason. The fact it's also good for the planet and is great for investors is useful as well, but we did it for cost to start with.
Go ahead, follow up, go ahead.
And just the other question around, you mentioned about Lori and Kobo and how the model is different, asset light versus what you're doing. Are you also able to get them to be your customers as well, just because you have the trucks, and does that effectively, give you that competitive edge as well?
And a question for you. Identify yourself.
All right, sorry. My name is Jay. I'm an investment director at Africa 50, and we invest in infrastructure in Africa.
Yeah, and some logistics pieces. So.
Yeah. So potentially we're looking, lots of people have come and said, can we use your truck? And I guess the way we would do that, as long as it's aligned with our operating model, because you can trash a truck very quickly. If you randomly assign a truck to a random driver, they will drive it like they stole it, and it will die in a couple of years. So what's important about our model, is fundamentally in our drivers' interest to look after the trucks, because the revenue their depot returns and therefore what they are able to earn is the gap between how much the financing of the truck and the lifetime of the truck. So so as long as people who want to use our trucks follow that model, and we can do that two ways. One is a service-based contract, so trucks and repairs, and the other way, and what we've done effectively with some of our clients, is we use them as anchor demand. So they will provide the demand for the depot, that gets the depot open, gets something to service, and then we build the rest of the demand around that client, because we can, if they've got backhauling, we'll fill the truck going the other way.
Do you have any other questions? Excellent.
Yeah, hi. It's Andrew Skipper from Hogan Lovells. There's lots of opportunities. Where do you see the biggest barriers? Nice setting up a warehouse, Jeffrey, but what if the roads don't work? And where do you see rail in the future taking part in these opportunities? How do you get scale, basically?
So great, thanks, Andrew. And the reality is, I think the whole audience knows, Africa needs a huge amount of infrastructure to be built. So what I would say is there is actually a lot of progress going on. I mean, every airport I fly into in Africa now is practically a new airport. Roads are getting better. Ports have got substantially better, and there's an argument saying there's too many ports in the pipeline now, all chasing the same market. So when we looked at sort of putting our Africa strategy together in 2016, when I first joined Agility, the idea was you can't fix everything, so let's find something that we're very comfortable with, we understand, we know we're good at, and let's execute on that. So hopefully Africa 50 and his colleagues can help with the railways and the infrastructure, and I think there's a huge demand for that, again, as the continental free trade zone comes. But as a company investing in Africa, we're fixing one little part of that jigsaw. That's not to say the whole jigsaw doesn't need to be put in place, but the reality is we think international standard, reliable, efficient warehousing is a key component of that overall structure of element, and that's what we know and understand, so that's what we focus on.
I think I'll add, you're right about, it's important that you pull in the infrastructure to meet real business needs. Build the infrastructure and what we're seeing, in many ways, most businesses in Africa are logistics businesses because in order to operate, they have to have their own logistics fleet. And then that works for some people who've got a
like Flour Mills Nigeria owns 512 trucks, for example. Dangote, what, 12,000 trucks. But how many do you think are actually working at any given time?
That's
another issue. Exactly. So these are some of the issues of where everyone has to vertically integrate.
And particularly if you're in a seasonal business, it becomes really, really problematic because you can't afford to run it, and then the local, the available solutions are really unreliable. So, part of what we see is, by providing people transport, you then suddenly unlock a load of opportunity. We're looking at the small rural end, but I guess it's similar at the larger end. Creating the opportunity for things to be straightforward and easy and reliable suddenly then means that you can build business opportunities around that, because our big clients are saying things to us like, RTC use us because we're reliable, and they've got labor and machines running at the processing facilities, and an unreliable truck means half a day's labor wasted. At the other end, smaller users are using us because it's cheap and they can move more stuff than a bicycle.
Yeah.
But that all builds more business activity, which then creates the revenues to build the roads.
And I think fundamental to that is the Continental Free Trade Agreement, which basically enables businesses to scale. So if I'm a little manufacturing business in an Agility warehouse currently in Ghana, my market is really Ghana, because to ship goods into Cote d'Ivoire or across to Lagos is incredibly difficult. So and I don't think you can underestimate how important for Africa the Continental Free Trade Agreement is, because firstly, as that little Ghanaian producer suddenly can sell to the whole of West Africa and cross-border. Just now, if you move a container from Dakar to Lagos, you get stopped at 26 checkpoints. Yeah, and you may or you may not get through them depending on what your face looks like. So it's incredibly inefficient. So most African producers only produce for their domestic market. If you can expand that into producing for a regional market, or indeed even a pan-African market, that's a fundamental game changer, because suddenly your market isn't 35 million people in Ghana, it's whatever it is, 350 million people in West Africa. But more importantly than that, Africa, as I said at the beginning, one of the barriers is we import absolutely everything. Yeah. So the reality is, if you can stimulate local production into larger local markets, you then create a platform that enables Africa to become a net exporter. Currently, if an African business quotes, other than in sort of specific commodities, but quotes to compete against the Asia businesses, etc., the cost of logistics and the cost of manufacturing makes it impossible for Africa to compete on a global market. If the Continental Free Trade Zone can deliver what it's meant to, you become a much bigger business because you're dealing across the whole of West Africa, and that enables you with scale to be able to become an exporter that actually is competitive in world markets. And that's the real game changer at the end of that process for Africa.
And it brings us back to the need for investing in infrastructure, because the high cost of logistics makes the companies unproductive, or unproductive actually on a per company basis, on a firm level. There's been some pretty interesting studies that have come out on firm level productivity, which is still very low. And then also on competing with Southeast Asia in particular. And electricity costs in West Africa is still very high, as Nigeria, as you know. So my last question is, how are you guys both thinking about new markets? So with Jeff, with you guys, you've talked about Ghana, Nigeria, et cetera, but really you're thinking about cities and how the cities are operating and new mega cities and trends. And I've seen a shift in multinationals as they think not so much about Ghana. They think about, you go to Accra, then you go to Abidjan. And you choose Abidjan over Dakar because Abidjan has more connectivity to other cities than, say, Dakar. And then Lagos, the market isn't 200 million. It's Lagos, and it's maybe, Lagos is 20 million, but maybe 4 million people you're targeting in Lagos. Maybe you go to Port Harcourt and Abuja, and then you go on to another country because the other market, the whole market isn't of interest. So how do you choose new markets? And then Simon would come to you on how are you thinking about next markets from after Rwanda?
So from our perspective, it is just exactly what we said, it's scale. So the reality is you look at Dakar, Senegal, interesting market and great place to visit. I like Dakar a lot. But the reality is there isn't a huge amount of trade going on. So I've done one project in Lagos, and when I sit on a whiteboard and say, okay, future markets, the reality is that the temptation is to do another 6 warehouse parks in Nigeria before you go off to smaller countries. We spend a lot of time with the Rwandan government talking about building a warehouse park there. The volume of trade is really difficult to justify a $150 million investment. So over time, those markets will grow. Over time, I think our customers will be saying, great, you're in the top 20 markets, but actually we want to do the top 25, we want to do the top 30. So we will go into those markets, and our vision is a Pan-African warehouse park in each of the major cities across the continent. And that's just a question of, as the market grows, you develop more capacity to support that.
Sure. Simon, new markets.
So when we started in March in Rwanda, our first question was really, is there the revenue? Does this work? And we've answered that. And our other big question is, could we get an electric truck to work? And the first electric truck is outside, and it was on BBC News last week. So we've completed that part. The next bit is putting those two together and demonstrating the unit economics of an EV in a depot in Rwanda, which we'll do next year. And then we're looking to expand. Now, there's East Africa and the adjacent countries to Rwanda, which are kind of, I guess, obvious choices, but also across into West Africa. We see the model as having applicability across the continent. So.
Yeah, I think there's some innovative options too as companies in Africa go pan-EM before they go to their neighbors, because it's, again, by cities, et cetera. So listen, we're up at time, and I want to thank my small and intimate but dynamic panel. And those of you who asked questions, really, it's been a pleasure to moderate today. So Sarah, I turn it back over to you. And thank you, Jeff. Thanks, Simon.
Thanks, Aubrey.
Fantastic. Thank you, guys.